Welcome back to Talk Tickers, where we break down the latest earnings calls for you. Today, we are diving deep into analog devices. Their latest numbers really lit a fire under the stock. And the big question on everyone's mind, is there more gas left in the tank? So, analog devices shot up around 11% right after they dropped their earnings report, pushing the stock to new all-time highs. So you gotta ask, right? Is this just a sugar rush, or is this the real deal, the beginning of a much bigger move? Let's dig into the numbers and see what's really going on. All right, first up, let's look at the Q4 results. And spoiler alert, it was a clear beat. On the revenue side, they pulled in $3.08 billion. Now, Wall Street was hoping for something around 3.01, maybe 3.04 billion. So yeah, they didn't just meet expectations, they comfortably sailed right past them. A really solid beat on the top line. And it's the same story for earnings. Adjusted EPS came in at $2.26. The street was looking for about $2.23. So another nice beat there on the bottom line. And look, you can see it right here. This was pretty much the story of the quarter. A significant beat on both the top and the bottom lines. This isn't just a fluke. It really points to some fantastic operational performance and, just great execution by the whole team over there. But here's what's really impressive to me. This growth wasn't just coming from one place. It was super broad-based. You can see their industrial business is just a beast, making up almost half, 46%, of their total revenue. But really, every part of the business chipped in. That's the kind of widespread strength you love to see. Okay, so what's fueling all this? Let's pop the hood and take a look at the growth engines. Look, management was pounding the table on this during their call. They're saying, hey, this isn't just your typical upswing in the business cycle. No, they are riding some massive long-term trends, what we call secular tailwinds. We're talking about huge things like AI, factory automation, the whole green energy transition, and of course, the electrification of cars. These are trends that are going to be driving demand for years to come. And the AI story here is just, wow, it's absolutely exploding. Just listen to this quote from their CFO. Their data center business just blew past a $1 billion run rate. And get this, it's grown over 50% year over year for 3 straight quarters. That's just insane growth. And it's all thanks to the tidal wave of spending on AI infrastructure. And operationally, these guys are an absolute machine. They posted a record free cash flow margin of 39% for the whole year. Let me tell you, that is a huge number. It's totally best in class. It just screams efficiency and shows you how powerful their business model really is. So what are they doing with all that cash? Letting it pile up? Nope. They're giving it right back to you, the shareholders. A whopping 96% of it, through buybacks and dividends. That is a massive vote of confidence for management about where they think the business is heading. All right, so the past quarter was great, but what about the future? Let's look at their guidance, because this is where things get even more interesting. So management's guidance for Q1, it wasn't just a little better than expected, it was way better. They're projecting revenue around $3.1 billion and EPS of $2.29. Both of those numbers are well ahead of what analysts were predicting. That, my friends, is what we call a beat and raise, and it's exactly what you want to see. And again, this isn't some one-hit wonder. This is the 7th quarter in a row that they've posted this kind of above-average growth. That's not a blip. That's a trend. It really signals that the momentum is real and that they're re-accelerating as we head into the new fiscal year. Okay, so we've got a fantastic quarter in the books and even stronger guidance for what's next. So what's our call on the stock? Let's break it down. Based on everything we've seen, our rating is simple: outperform. So here's our trade idea, broken down for you. First, the core thesis. We believe the story around ADI is fundamentally changing. People need to stop thinking of them as just another cyclical chip company. No, this is a long-term, AI-driven growth story. They're at the heart of what's called the intelligent edge, putting smarts directly into things like cars and factory equipment. And honestly, we don't think the market has fully woken up to this yet. So, second part, the trade itself. We're going long ADI, and we're setting a price target of $310. Our thinking is that as the market starts to recognize this durable double-digit growth potential, the stock's valuation, its PE multiple, is going to expand. It deserves to trade at a higher price. And finally, let's talk risks, because there are always risks. We're keeping a close eye on the big picture macroeconomy, of course. Any geopolitical drama with tariffs could be an issue. And we're also watching the auto market. Management themselves has been a little cautious on that front, so it's definitely something to be aware of.
And before we wrap up, a very important note. This is not financial advice.